Despite the fact that the supply of houses for sale nationwide increased to a 4-year high in June, existing home sales actually decreased. And on top of that, sales so far this year are on track to being at a 3-decade low. Meanwhile, the US median sale price increased to a new record high, but those gains may be starting to lose momentum due to the fact we're seeing a huge increase in housing supply as well as affordability constraints as well. This is based on a brand new report. So if you guys get any value out of today's video, then please hit the like button. Also consider subscribing as well. I'm only about, or I should say, we are only about 500 subscribers away to reaching 100,000 subscribers on this channel. Just absolutely mind blowing. Thank you all for your support. With that said, I have a lot to share in today's video, so let's begin. This new report is from the National Association of Realtors, just posted today, which is on July 23rd. It says existing home sales slipped, down by 5.4% in June. Meanwhile, we have all-time record highs at just under 427,000. It says here, existing home sales fell in June as the median home price climbed to record highs. Also, all 4 major U.S. regions posted decreases in home sales. So let's take a closer look at this. So overall, for the nation, the sales pace for June, these numbers are seasonally adjusted. They're also annualized as well, or annualized, I should say. So just under 3.9 million sales. Again, that's annualized and seasonally adjusted, down 5.4% compared to May, and also coincidentally down by the same amount compared to 12 months ago. So all regions posted decreases. This is the Northeast, the Midwest, the South, and the West, all posted decreases compared to the previous month, and also down from 1 year ago, except for the West, which was flat compared to June of 2023. All right, let's get a little bit nerdy here. I want to share my own analysis of NAR's data, looking at home sales first. We'll look at inventory and also home prices as well. So regarding home sales, that is, by the way, for single-family houses, townhomes, and condos, for the month of June, is really based on purchase contracts being signed between buyers and sellers. So if you're a home buyer, you got your offer accepted in, let's just say, May, or I should say in April. Back then, the monthly rate, according to Freddie Mac, for people with great credit, these are average rates for April, it was at 6.99%. Then an increase in May up to 7.06%. Ever since then, rates have been more or less coming down and been hovering around 6.8 to about 6.9% for about a month. In my opinion, sales remain very low unless affordability improves. But what we're seeing right now is that sales decrease, in my opinion, due to the rise of inventory, but also due to the rise in rates as well, making, of course, housing affordability very, very challenging as well. So the sales pace this June was just under 3.9 million, quite a bit lower than the 3.99 million that was forecasted. Also, this is relatively low levels in sales as well. The trough, which was in October of 2023, which is basically a 13-year low, was at 3.85 million. Now we're just above that at 3.89 million. That, by the way, is the slowest sales pace since December of 2023. What's quite remarkable regarding sales so far this year, we're down compared to last year, and last year was at a 28-year low. So right now we're basically on track to being at a 3-decade low in home sales if this trend continues for the remainder of the year. All right, let's also look at the changes from 1 month ago and 1 year ago. Regarding the change from May, the previous month, it's down by 5.4%. That marks the 4th consecutive monthly decrease. Quite the difference compared to the gains we saw in January and February. Back in January, we saw a gain of 3.1% compared to December, and a giant increase in sales in February, an increase of 9.5%. And keep in mind, these figures are all seasonally adjusted. Therefore, that makes it more easier to compare month over month changes. Like I mentioned, sales are falling due to affordability constraints, elevated rates, and of course, record high home prices, making it very challenging for home buyers to buy houses right now. Also, inventory has been climbing as well, yet sales decreasing. So we're seeing supply rising by more than 10%, more than 30%, in fact, yet sales still decreased by 5%. So even though there's a lot more houses to choose from, if you're a home buyer out there, sales still decreased by 5.4%. And lastly, this 5.4% decrease is the biggest one ever since November of 2022. So in other words, a big decrease compared to the previous month. When looking at the year-over-year change, again, also down by 5.4%, this one kind of tells us a different story, because looking at June of 2023 compared to June of 2022, sales tanked down by 19.9%, whereas this year it fell by 5.4%. So in my opinion, what we're seeing here is that we saw a crash in home sales last year, and this year it's not crashing, but we're kind of maintaining these very low levels in transactions in the United States. And speaking of the correction we saw last year, look at this. From June of 2022, that's when it started, until we hit October of 2023, we saw a decrease in home sales by more than 10%. Ever since then, it has been relatively subdued, but we're still down compared to 12 months ago as well. That, by the way, marks the 35th consecutive month in which home sales are down or basically flat compared to 12 months ago. So we basically have had, nearly 3 years of decreases in home sales. The last time we saw an increase year over year in sales was way back in July of 2021. Also looking at sales compared to June of 2019, obviously pre-pandemic era, we're down by 28%. We're also down by 35% compared to June of 2021. Back in 2021, we had a 15-year high in home sales. So pretty telling. We're down compared to pre-COVID levels, and we're way down compared to the peak that was set back in 2021. Going back to the National Association of Realtors press release, it says, and this is from their chief economist, Lawrence Yun, we're seeing a slow shift from a seller's market to a buyer's market. A buyer's market means that buyers have an advantage over home sellers. That in general is an environment in which home prices are coming down. In contrast, a seller's market, which we've been in a seller's market for many years, that means that sellers have an advantage over home buyers, which drives up home prices. It's important to note here that he's not saying we're in a buyer's market just yet, but we're actually moving in that direction though. Homes are sitting on the market a bit longer, and sellers are receiving fewer offers. More buyers are insisting on home inspections and appraisals, and inventory is definitely rising on a national basis. To me, this is a good thing. I think it's very risky to place offers, no inspections, waiving your appraisal, buying a house, as is. That's a risky endeavor if you're a home buyer. So it's great to see that we're seeing a shift towards a buyer's market, because frankly, that's needed. And actually, in the long run, it'll be actually more healthy for a housing market as well. In any case, let's talk about inventory levels. And these figures right here tend to be a lot higher compared to other figures or other sources, such as Altos Research, Realtor.com, and also Redfin as well. I believe that NAR includes pending home sales in their inventory numbers. So they're basically looking at unsold inventory, houses actually for sale, but also houses that are under a contract with home buyer. So for the month of June, we're at 1.32 million units, up 3.1% compared to the previous month, and up by about 23.4% year over year. Meanwhile, the month supply is sitting at a 4.1 month supply at the current sales pace, up from the 3.7 months in May and up from the 3.1 months from 12 months ago. The last time unsold inventory, or the month supply, posted a 4-month supply was way back in May of 2020 at 4.5 months. That was obviously more impacted by COVID lockdowns than anything else. So let's have a closer look at this based on my own analysis of their data for June. So for the month of June, 1,320,000 existing houses for sale. Again, this is probably including some pending home sales. And also the month supply is at 4.1 months. So just over 1.3 million houses for sale. This is the highest amount since October of 2020. Therefore, housing inventory is basically at a 4-year high as well. These figures, by the way, are not seasonally adjusted, and inventory tends to peak in mid-year around June. And here we are in June, right? So let's see in the coming months if inventory has already peaked. Redfin is already reporting over the past 2 weeks that inventory is actually coming down. So stay tuned for that, because if inventory starts peaking like it should, we should see inventory start decreasing for the remainder of the year. In regards to the month supply at 4.1 months, that's the highest level since May of 2020, and that is a 4-year high. On top of that, based on my nerdy analysis here, the average June from 2017, 18, and 19 was a 4.2 month supply. Now we're at 4.1 months. So the month supply is basically in line with pre-COVID levels, even though inventory levels at 1.3 million is still lower than pre-COVID. And in fact, down by about 31% compared to June of 2019. Also, I added this as well. The all-time record highs in the month supply was a whopping 11.9 months. That was set back in July of 2010. Now the month supply is only 4.1 months. The record low was set back in January of 2022 at 1.6 months. So we're basically double the record lows, but we have a very long ways to go in order to see the month supply anywhere close to 2010's levels. I also did some digging for you guys as well, looking at the year-to-date change. This is the change of inventory, or the amount of houses for sale, this January compared to June this year, is an increase of 31% so far this year. Compare that to last year, we only saw a gain of 9%. Again, that's January through June last year, a gain of 9%. Whereas in 2022, a giant increase up by 47% compared to only the 31% gain we're seeing this year so far. Now, going all the way back until June of 2017 compared to January that year, inventory increased by 15%. In 2018, it increased by 27%. Then 2019, it rose by 21%. Therefore, the average January through June increase in 2017 through 19 was a gain of 21%. I put this together for you guys in this video because I want to explain how the gains of inventory compared to the start this year compares to years past. And that's this right here. So far this year, inventory is growing much faster compared to 2017 and 2019. Again, an increase of 21% compared to the gain of 31% we're seeing so far this year. But it's growing at a much slower pace compared to 2022. So my take is that we will likely not see a similar sharp pullback in home prices like we saw in 2022, because inventory is not even growing as fast compared to the same time frame in 2022. There's that, but also we're not seeing in an environment in which mortgage rates doubled in less than 12 months like we saw in 2022, which all contributed to the rise of inventory and of course the decrease in prices we saw that year. Now, I'm not trying to paint this kind of rosy picture saying, hey, there's nothing to worry about here, because the rapid rise of inventory, basically at a 4-year high right now, even though the gains are not rising as fast as 2022, basically being at a 4-month high is going to limit future big increases in home prices for the remainder of the year. Of course, I'll keep you updated as more data comes in as well. All right, going back to NAR's report, it says the median existing home sale price for all housing types, again, single family houses, condos, townhomes, and co-ops, was just under $427,000, an all-time record high, and a gain of 4.1% from June of 2023. Also, all 4 US regions posted gains as well. According to Lawrence Yoon, he says even as the median home price reach a new record high, further large accelerations are unlikely. I also believe that as well due to the rapid rise of inventory. So it says supply and demand dynamics are nearing a balanced market condition in which home buyers nor home sellers have an advantage over others, right? So inventory rose by double digits, yet sales decreased. So therefore, we're seeing demand going down, but supply rising in imbalance. Also, the month supply of inventory reached its highest level in more than 4 years, as I share with you guys. So that's all they had to say regarding home prices. But of course, I have a lot to share regarding this because here is my own analysis of their data. I pulled these two columns from their website, years ago, and just added my own notes here. So the U.S. median sold price, $426,900, a new record high. On top of that, $13,000 more than 2022's peak. This also marks the second consecutive month of record high home prices because we saw that in May as well. And looking at the change in prices compared to the previous month, which was in May, that marks the fifth consecutive month of monthly gains, which is seasonal. The 2.3% increase, though, is lower than historical norms going back to 2010. Based on my Excel formula there, the average increase from May to June each and every year, going back to 2010, is an increase of 3.7%, whereas this year it only increased by 2.3%. Looking at the year-over-year changes, up by 4.1%. It's interesting to see here, as a note there, the year-over-year gains are actually losing momentum over the past several months. So back in April, we're at a gain of 5.4%. Then in May, a gain of 5.2. Now we're only an increase of 4.1%. So the year-over-year gains are actually decelerating, for lack of a better word. However, though, prices are higher compared to the previous year, now for 12 consecutive months. For comparison's sake, at this time last year, the median sale price decreased by 0.9%, whereas this year we're up by 4.1%. And that, by the way, was only the fourth time since 2012 in which home sold prices decreased compared to 12 months ago. So therefore, quite the turnaround compared to 2023. Lastly, the 4.1% gain this June is lower than historical norms as well. So the historical norm, or a historical increase from June compared to the previous June, going back to 2010, is an increase of 6.2%. This year, up by 4.1%. So big picture here, even though we have all-time record highs in home prices, the gains compared to the previous month are not as high compared to long-run averages. And also we're seeing that as well regarding the year-over-year change, basically decelerating. I hate that word, but it is decelerating, still increasing, but not increasing at the same rate compared to the years or months past. But also this 4.1% gain is much less than long-term averages at a 6.2% increase. Also, as I mentioned right here, the year-over-year gains are actually being less affected by sales of more expensive properties as well. Before I share that with you guys, here's what we saw back in April this year compared to April of 2023. Just focus on the highlighted areas here. So for sales in April, in the range of 750,000 to 1 million, that increased by 23.8% compared to April of 2023. For home sales for over $1 million this April, a giant increase of 39.7%. In contrast, for all other price segments in the more affordable range, we barely squeaked out a gain, rising at a much slower clip compared to more expensive properties. That's what happened in April. And back then I told you guys that the gains in home sold prices were likely impacted by these more expensive properties that are selling. Because again, back then, the median sold price was around $400,000. So therefore, when you see a giant increase up by nearly 40% for homes for over $1 million, that still impacts overall the median home sold price on a national level. Now look at that same chart this June, entirely different story. $1 million properties only increased by 3.6%. All our price segments decreased greatly. Therefore, in my opinion, because we're not seeing the growth rate of $1 million properties rising not nearly as fast as what we saw back in April, that basically has a lesser impact regarding the changes in home prices from 12 months ago. All right, going back to my spreadsheet here, I want to share how home prices have changed over the past several years. So this June compared to June of 2022, a small gain up by 3%. 3 years up by 16%. Then looking at 4 years ago, back in June of 2020, giant increase of 45%. And of course, 5 years ago, compared to 2019, up by a whopping 50%. Also, just for fun, I add this as well. The change in the median sold price from June '08 through June of 2009, a big decrease down by 15%. Compare that to this June, up by 2.3%. All right, let's get back to NAR's report. And of course, if you guys got any value out of that analysis, please hit the like button. I really appreciate that because that tends to take me hours to make each and every month. But I actually enjoy doing it. I would do it anyways. Anyways, looking at first-time home buyers for the month of June, they purchased around 29% of all home sales in June. These figures I'm sharing with you guys, by the way, is based on a survey, not actual numbers. Because if a buyer buys a house, there's no real record regarding if that is a first-time home buyer or an investor, right? So it's just based on a survey. In any case, for first-time home buyers, they purchased around 1/3 of all home sales in June, down from the 31% that we saw in May, but up from 27% that we saw in June of 2023. All cash sales, about 28% of all transactions, unchanged compared to the previous month, but slightly up compared to the 26% we saw 1 year ago. Meanwhile, individual investors or second home buyers who make up many cash sales purchased 16% of all houses in June, identical to May, but down from 18% that we saw in June last year. Also, distressed home sales, which are defined by foreclosures or short sales, that was only 2% of all home sales in June, unchanged from last month and from the previous year. That percentage there has been paid at around 1 to 2% for many years now. And when I mean many years, I mean over the past several years. All right, lastly, I want to share this with you guys. Here is a slideshow from NAR. I want to share this because this really shares the run-up in sales that we saw in 2020 and then maintained that in 2021. Ever since then, sales have been basically going down, down, down. This current sales pace this June at 3.9 million. Look at around, this is approximately January of 2022, 6.4 million. Huge decrease in sales over the past couple of years. We also seen a huge run up in prices as well. This is a really good snapshot looking at the seasonality regarding the U.S. median sold price. Rises in the spring home buying season and then decreases in the winter months. It does that each and every year. Having said that, it's pretty crazy that back in June of 2020, we were only at about 295,000. Now it's at approaching $427,000. And that's an increase of 45% as well. And lastly, here's another way to look at the percent change in home sales by price range. The only price range that increased was for sales for over $1 million. But again, it only increased by 3.6% compared to the over 30% gains year over year we saw in April. But all other price segments decreased, especially for houses for less than $100,000. That decreased by 27%, which makes sense given the fact that we're basically at nearly 430,000 right now. We're seeing a lack of home sales for less than 100,000. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys want a real estate agent referral, please email me at jason@meetjasonwalter.com, or please check out my website, which is realestateteamfinder.com. With that said, please subscribe if you haven't done so already. Help us reach 100,000 subscribers. I just can't believe we're at that high. It just blows my mind. Thank you for all your support. I appreciate you guys so much. Have an amazing day, and we'll see you in the next video.